Yo, what's up, gang? It's Deluxe, and I'm back with another video. And in this video, we're going to be going over exactly how I backtest and kind of the benefits of it, and kind of my process of how I go about backtesting and, when I backtest. So, to jump straight into it, why do I backtest? So, I personally think I still need a lot more practice with my model. Understanding what setups are good, what setups are bad, all of that. And a good way to do that is to look back on previous days in the market and try to find entries with your model. And it's a risk-free, version of being able to enter a trade and seeing why it might work and why it might not work. So what I've been doing recently, my goal is to backtest at least 1 week of data every single day. So you can see right here, I'm currently at Monday, the 17th of June, 2024. And today it's currently June 15th, 2025. So I'm back a year from today, and I'm going to try to be doing 1 week of data every single day. So if there's 52 weeks in a year, that means in 52 days, I should hopefully, catch up to today's day. So that'll give me 52 days of data collecting, and then I can, go back to 2023, repeat that. Maybe I could have started, in further away, maybe back in 2020, but I wanted to kind of do something more recent because that might have more, relevance to today's market. So I'm going to go through a little bit of what I've been looking at and kind of the process of how I go through backtesting. And it's pretty simple. It's basically you take any day like you normally would, as you enter a normal trading day that's live, and you kind of go through those steps of how you want to set up for the day, and then just play the day like it's any other one. So typically what I'll do leading up to market open is I will look for my bias for today. So if I go to the 4-hour here, you can see back in 2024, we were at all-time highs on the NASDAQ, right? And what I've learned is that when we're at all-time highs, the bias is always bullish. And you can see, we're literally at the all-time high here. So our bias for trading this day in backtesting is bullish. And you can see, we're even inverting fair value gaps to the upside here, which is just further proof that we're bullish. So pretty solid bias there. And then I do collect data on all the sessions. Normally I'll only trade AM session and PM session live, but I do want to collect data in other sessions as well, specifically London. Even though I wouldn't normally be awake for it, I still think it's good to see how the model plays out during different sessions and, which one it might be even more effective in, and draw my conclusion there. So I want to run through kind of a trade here. Now you can see we're near the London kill zone in this scenario here. So if I were to start this, I would mark out our, highs and lows, fair value gaps. You can see there's a large data wick. Well, no, this isn't a data wick because you can see, let me close this. You can see this is right at 6 p.m. So this was actually the new week gap. So you can see Friday was this candle right here. Let me zoom in. This candle right here was Friday at almost 5 p.m. So leading up to the close. And then this is Sunday at 6 p.m. So this was market close for the weekend, and then this was the open. So I wouldn't consider this a data wick. That's kind of the issue with backtesting is you don't have news. You can't really see the momentum of candles, how they print in live time. So you kind of have to do, you kind of have to go with what you got. So my assumption is this isn't actually a data wick. This is just, a high or a large, volume candle, I guess you'd call it. But you can see we made a low inside this fair value gap, which is pretty important because I like to use fair value gaps that have held price up before. So if I have proof that this fair value gap is, sent price back up, if I see price tap back into it and, maybe even sweep this low, that's just a good sign that we're looking for a reversal back upwards, kind of like this. So that's my idea, just based off of what I've seen here. You can see we took out the high of this wick anyways. So we're probably looking to come back down and sweep this potentially. And yeah, so if I want to be trading during London session, we'll go ahead and go to that. So let me go to the 5 minute on both the NQ and the micro, because I'm going to be charting on the NQ and then just doing my entries on here. You can see I already looked at this, but so this is kind of like a hindsight thing because I have looked at this already to find a winning trade. But before, when I did do the trade, I had no idea what the outcome was, and I was happy with how it played out. So you can see we didn't quite sweep the low here, and I noticed kind of like a volatile reaction to this inverse of the fair value gap. So I was like, well, okay, that's interesting. We had like a pretty good V shape, but we didn't sweep this low here. So I'm like, okay, let's check ES. And you can see I already charted this out. This exact low that I was looking at before, you see on the 5 minute, it has a bit of a larger gap on here, but it still remains the same. You see we formed this low here, which is the exact same one on NQ. You can see 6 p.m. And we swept it on ES. So what does that mean? That's an SMT divergence. So we can go ahead and pair that as our confluence right here. And so that's one. Let me pull up my diagram that Dodgy made, because that's kind of how I know what a good entry is and what isn't. So let me pull that up. Okay, so this is what an A+ setup would be when you have an entry model with Dodgy's model, which is what I'm learning. So we have a liquidity sweep and delivery from a fair value gap. We'll have momentum, which is kind of hard to see on, back testing. And then we'll have clear targets, singular fair value gap, and we're in premium if we're shorting or discount if we're longing. So if we look back at the chart here, even though we didn't quite sweep this low on NQ, we formed an SMT, which if I go back here, SMTs are a bonus. So I don't think this would be necessarily considered A+, although we did sweep, Asia low. So I would still consider that a, external liquidity sweep, as well as forming the SMT, which is just double, proof that we want to go back up. So I would call this actually A+. I know I might have said A, but because we're in discount of the range, if we look here, I would call like our dealing range here kind of what we're working with. So from here to here, if I go back to the 2 minute, which is what I would have entered on. Let's see, this was the gap that we inverted that I would enter on. And it would have been this one because we closed above it. So I would have entered here. And okay, let's go back through the checklist. Liquidity sweep delivery from fair value gap. Cool, we have both Asia low swept from this leg down, as well as tapping into this fair value gap that sent price back up. So that's just really good proof that we want to go back up as well. Momentum with no chop. You can see we literally just printed a green candle straight back through this the second we went into it. So we're obviously disrespecting bearish PD arrays. Okay, so targets are always clear, which we want to be looking for equal highs, equal lows, intermediate term higher lows, data highs, data lows, or trendline liquidity. So we don't really have much trendline liquidity. We don't really have equal highs or equal lows anywhere because my indicator would mark that out. But also if we just manually look, I don't really see anything. But intermediate term high. And I do have a little diagram of good draws on liquidity as well that I'll pull up. So this is kind of my hierarchy of draws on liquidity that I got from Dodgy's Discord, which I think this was created by Reliable. He's one of Dodgy's like best students, and he also teaches the PM streams and has like a separate community kind of that you join. But he's a really good teacher, and he's linked this before when he like takes over the AM streams. And you can see the hierarchy of draws on liquidity is number 1 is going to be data wicks. Number 2 is stacked high time frame equal equal highs or lows. So triple equal lows, and higher time frame being 15-minute to 1 day. So far we don't have that. High time frame unfilled liquidity. If we look back, let's see. So high time frame meaning 15 plus minutes. Nothing really here. Like, this is a small gap that hasn't been closed above yet, but I wouldn't really call that important. So low resistance liquidity, we don't really have either. I mean, yeah, there's just no trendline liquidity there. External liquidity. So this is kind of what I am seeing here, because on the 15-minute, I would call this external liquidity because it's an obvious high on a higher time frame, meaning it's kind of outside these little dealing range candles, you know. So we can also see that exact high aligns with this pretty obvious fair value gap, and you can see we made a high inside of it and then rejected off of it. So that kind of tells me this is also a high resistance, you know, PD array, because it's sent price down before. So if I were to set a take profit, I would probably just take my full profit right there. So given that being our drawn liquidity, being an intermediate term high because it's a high made inside of a fair value gap, I would target that. And you can see the risk reward is pretty good. And with Dodgy's model, the way we do stop losses is it's a close below the fair value gap we inverted and a hard stop below the swing low. So I typically aim to have this low be around $250 risk, and this low, or this, you know, area where price might close, be around $200. So if I were to enter this trade, I would go on to the micro, and because this is a only 5-point stop loss, I can afford to do a lot of contracts. And I have a little cheat sheet here of kind of what I do for different size stops. And you can see I don't really have one below 10 points. And you can see this one is 5 points, about, you know, guessing where price might close below if it is invalid. So 5 points, and this is 4 to 5 this is supposed to be micros. 4 to 5 micros for a 10 to 15 point stop. And this is half of that, so it most likely is going to be around, you know, 10 micros or, you know, 1 mini. So if we look here, we can see I'm only risking 160 at this swing low. And like I said earlier, I want to be risking around 250 at this swing low. So if this is 160 for 10, half of that is 80, so 40 plus 40 is 240. So I would buy 5 more, and you can see that puts us at 240, and one more contract would put us over my limit, right? 256. I don't want to risk more than 250, so I'm going to get rid of that one contract I just added. And I would want my take profit up here to be that same exact high. So if we look back on here, on the NQ, we can see they're a bit misaligned. So right there, it's kind of hard to tell without me like describing it. Basically, you can see the lines on each graph. So I would drag this to the low on NQ because you want to do all your charting on NQ. So you can see right here, we are at the low on NQ, and on MNQ, it doesn't quite line up. So you have to be wary of that. And now we're at 232 at the proper low. So if we bought one more, we would be under the $250 amount now. So that's solid. And that lets us risk, you know, still in our budget, you know, but it lets us gain more if this play does work out. So now we enter the trade, and Dodgy's model is to go break even at the first internal high. So that would be here. And if we look here, it is a 1R from here to here. So I wouldn't be opposed to scaling here in the case that it does fail, at least taking some partials, maybe 25%. We'll say 25%. So 25% scale, 25% of 16 is 4 contracts. So when price hits this level, if it was live, I would have a limit order to sell 4 contracts. But because this is backtesting, I kind of have to do it on the candle closure. So we'll look at that when I go ahead and replay time. And you can see we have this very obvious 5-minute gap that we don't know necessarily if it'll be ran through. And you can see it lines up perfectly with that first internal low. So it's good to go break even and also scale there, because price could always just go like this, you know, or like that and stop us out. And we want to at least secure some profits and also prevent ourselves from, you know, losing any money. So we go break even at that high, and also the fair value gap that we're not sure if we'll invert. So I'm going to take out 25% there, and I'm going to say if we do invert this, I have confidence that we're just going to reach this buy side. So I'm just going to hold until we reach this level. So if I go back up here, go back to the 2 minute, let's go ahead and go 1 minute, one more minute. Let's see. So we haven't quite hit our break even yet, but price is holding a bit for some reason, and we haven't hit our break even. So it's fine that we're dipping into, you know, the red here, as long as we don't close below. And you can see, okay, well, I kind of, let's just re-enter the trade because I kind of clicked it too many times. Okay, so right here, if I go forward 1 minute, you can see we hit that break even point, and the candle close. I think there's still 1 minute till this technically does close, but you can see we're right on that break even point. So exactly where I would take out 4 contracts. So that actually works perfectly. So we're going to scale 4 here because that's 25%. So I just set this to 4 and hit sell. So boom, $50 secured. And I'm also going to drag my stop loss to break even because that's my rule. It looks like I'm kind of uncorrelated here on the 2 graphs. Let me see where I actually entered. So I wanted to enter here. Oh, I see. So on MNQ, for some reason, it's slightly different, but let's just go off of the actual NQ entry that I would have had, which is down or up here, I guess. So we'll set it to here. It's a bit weird because they're so different, I guess, because hovering right here, 2890 should have been my entry, or I guess technically 2890 right here. So 2890 there, because this is where the next candle opened, which means that's where I would have entered. So let's do that. And now that we're break even and we scaled, we're going to keep going forward and see what happens. So price has crazy momentum. We just run this 5 minute. Well, I guess the 5 minute technically hasn't closed yet. So let's look at that and go forward. Okay, so we did just completely invert that 5 minute, disrespect it. You can see price still does, you know, kind of teeter around. But if we just keep going forward, keep going, and you can see, boom. Oh, I didn't set my take profit up here, but essentially you can see we hit the line. So $740 risking 250, all because we had a good setup right there. And I basically just look for that every time I backtest. So we had good confluences, and I played this exactly like how I would play this in a live trade. You know, I had my break even, I had my scaling, I had my targets, and price could, you know, go higher here, but there's not really any way to know that. And that's why I kind of want to secure all my profits there after taking almost a 5-hour trade, which is really sick. So let's see kind of what happens after here. You can see price goes down, you know, maybe a little pullback, and we do end up going much higher. Probably, yeah, to this obvious high right here. Is this all-time highs that we're forming right now? It is. So, I mean, there's in hindsight, sure, we could have targeted this, but to predict that price is going to go back to all-time highs after this little pullback here, it's been over a day. I guess not quite a day because this was during London session, but there's no there's no way to anticipate fully that we'll go back to all-time highs in this moment specifically. So I'm happy with taking my profits there on a 5R trade. Sure, maybe I could have left a runner or something, 1 or 2 contracts and held it to this high, or just even higher with like a trailing stop loss. But in backtesting, that's not really possible. So let's see what happens after this. All-time highs. And we just keep pumping. Let me set this. Oh, I can't. See, 5 minute, 15 minute. Do we just keep pumping? Let's see. Yeah, so eventually we get, kind of a pullback down. And yeah, eventually we would have hit my break even there. So you never really know when price is going to reverse, especially at all-time highs, because there's no data to go off of, So price did go past it and then back down. And I'll repeat this for, a week's worth of data. So if this is the 17th, I will plan to go till the 24th of June, finding entries, collecting data, and I'll actually show you guys how I journaled this as well. So if I go to my Notion, I have all my different Notions here for my funded accounts, paper trading, my old backtesting journal. This is a new one that I just created, and I like it a lot more because I can see the exact dates, the result. I've been tracking the confluences that I have as well, what I'm actually targeting, so I can kind of collect data on what targets work like the best, and then obviously the setup grades, the risk reward, did I follow the plan, and kind of just commenting on like the specifics of the trade, and then just uploading as well screenshots of the trade itself. So you can see this was the one that I just did. Why did that close? So you can see, actually this is wrong. I don't know why my entry wasn't down here because we inverted it there. I just kind of, let's see. It would have been right here because this is where we actually inverted it, not up here. So I actually screenshotted that wrong. But essentially you can see I can look back at all my, all my previous trades when backtesting and kind of see exactly like what works and what doesn't. So B setups, this was something I didn't take, but I know that it was a B setup, and you can see it doesn't play out the way I wanted it to. So I can say, okay, B setups are not worth taking on my funded account, but maybe A and A plus setups, let me sort it the right way. I can look at an A setup, and you can see I got break even here. It shows the result. I had a loss here on this A setup, just like that. And you can see both my A plus setups have been winners. So it's a really good way on collecting data for my model. This psychology tracker isn't really that useful in backtesting, but I think collecting data is a super good way to understand your model and know what works and what doesn't. And I strongly recommend, going into FX Replay or even just TradingView like this and backtesting your model, finding setups that are good, and even finding setups that probably will fail, and noting both of them, noting why the good ones work and why the bad ones don't. And that way you can kind of go into the live markets and see kind of the same patterns that you saw in backtesting and be like, oh, this is a winning setup, or oh, this is a losing setup. I just think it's really good to practice and get used to looking at the markets and, having screen time. And I think it's a lot of work to go back and look at previous, setups, and there's kind of an infinite amount of time you could spend on it. Like you could spend hours upon hours backtesting. Obviously, it does get a little boring, but in my opinion, it's worth it. So that's going to be it for this video. Let me know if you guys have any questions or advice for backtesting, and I'll see you guys in the next one.